What is up, guys? Welcome to How to Make Trading Simple, where I teach you how to make trading simple. And today I'm going to be showing you a simple, easy Forex and futures trading strategy that you can use to make money, as you can see. And I'm going to be showing you how I actually use this strategy to catch this simple 1 to 2 risk reward trade right here. So without further ado, let's get into it. So it's actually very simple to trade this strategy. The main things that you are going to be looking for are a break in structure. So we'll say break of structure. So this will be either, obviously, if you're bullish, you'll break a high. If you're bearish, you break the low. After your break of structure, you want to look for a fair value gap to form. Now it could be one gap or it can be multiple gaps. You just want to see fair value gap form after the break of structure. The next thing you're going to look for is a retracement. So you wait for price to retrace into the fair value gap. And the next thing you're going to look for is a reaction. And this reaction is where you find your entry. And that's pretty much it. It's pretty much like a 3, 4, 5-step process. Keep it very simple. Trading very simple. Oh yeah, and then the one thing that you're also going to do is you're going to aim for 1 to 2 risk to reward. And that's basically going to be it. So it's a 5-step process. Very simple, very easy. Make sure to screenshot this if you didn't already. And now I'm going to show you how I caught that trade and how I use this exact trading plan to catch this trade. So now obviously I was on the 1 hour time frame. You can use this on pretty much whatever time frame you want, 5 minute, 15 minute, 1 hour. But more than likely, if the setup is playing out on a higher time frame, it's more likely to play out on that time frame versus the lower time frames, especially if there's a higher time frame setup during when the lower time frame is also giving you setup. You're better off taking the higher time frame. But I took the 1 hour for this setup. As you can see, there's actually some drawdown. It almost got close to the stop loss, and then it went up to the take profit. This was during like a very non-volatile time. So the first thing what we're going to be looking for is obviously the steps that we mentioned out before is a break of structure. So I mean, as you can see, we broke above so many highs. I mean, we broke above these highs, broke above these highs, broke above these highs, and we broke above these highs. So we broke above a lot of highs. So I would have just marked these, or would have just marked the nearest one that I broke, which on this screen it's this high. So boom, step 1, we have the break of structure down. So let's type that in. So we have BOS, just stands for break of structure. Next thing, what do we look for? We look for a fair value gap to form. So after price broke structure, we wait for a fair value gap to form. As we can see, there's 2 fair value gaps here. So then we'll type in fair value gap. That's the next step. And then we'll go ahead and just mark out these FEGs. You can just mark them all out like that. I just marked both of them. It's just one rectangle because it's easier to do that way. Then what do we wait for next? We wait for a retracement. And we would have waited for price to retrace down into this fair value gap. So that's the third step. We see a retracement. Now once we're in the fair value gap, we saw the retracement, we saw the break of structure, then we look for an entry. So our entry is simply just bullish engulfing candles and bullish candles coming out of the gap, making it look like price wants to head higher. So if we see this candle right here, this big green candle, once we saw this candle start forming and being green, we're gonna take our entry there. So that's obviously what I did here. Of course, I took mine like a little bit later, so it was more around like right here. And then you set your stop loss at the low that price last reacted from the fair value gap, which would have been this low. and then we would expect that low not to be taken. If that low was breached, then the setup would be invalid. And you really had a few targets you could have aimed for. You could have aimed for this, could have aimed for the high, but I would have just set mine at a 1 to 2, which is what I did. Keep it nice and simple. 1 to 2 risk reward. Well, sorry. There we go. 1 to 2 risk reward. You can see I entered here, and then I closed my trade up here after it hit 1 to 2. So this is very simple. All we did is we had our break structure, we had a fair value gap, we had a retracement, we had our reaction, which remember, or the reaction is that the entry model that we're looking for is just a reaction, candlestick reaction, and then we set 1 to 2 risk to reward, and that was it. So using this simple 5-step process, I was able to catch this trade along with multiple trades. This is my only entry model. This is what I use the whole time. So I believe if you make trading simple with a simple, easy to follow process, not adding all these extra indicators, all these extra concepts, none of that's really necessary. The main things that really matter in trading are obviously market structure. Market structure is really the main thing. And then we're just using fair value gaps to find entries, and we're waiting for the reactions and setting our targets higher or lower depending on if we're bearish or we're bullish. So this was a good, very good bullish scenario. One of my other videos, I'll go over a bearish scenario using the same strategy. If you guys have any questions, let me know in the comments. Remember, it's just a simple 5-step process. Hope you guys enjoyed this video. Make sure to like, comment, and subscribe, and I'll see you guys in the next one.